Good afternoon, ladies and gentlemen. We'd like to roll now. If anybody is waiting outside, can you just come in? We'd like to start. Thank you. Good afternoon. My name is Monjeet, and I head the marketing function with William O'Neill in India. Thank you very much, everybody, for coming in for this press conference to launch MarketSmith in India. I, on behalf of William O'Neill India, would like to welcome you and thank you once again for being a part of this launch conference. For the past half a century, O'Neill companies have innovated services to support the equity investing fraternity across the globe. All these services are guided by a method of investing methodology created by our founder, William J. O'Neill, who has helped thousands of investors across the world to make more money in the stock market. Today, in our midst, we have Mr. Stephen Birch, who is the president of William O'Neill and O'Neill Companies, and has been working with William O'Neill and O'Neill Companies for the last 20 years. I'd like to welcome Stephen Birch to India and thank him for being a part of this press conference. I would also like to introduce you to Mr. Anupam Singhi, who has been working with William O'Neill India since its helm in 2013, and he is the CEO of William O'Neill in India. Mr. Singhi is going to take you through the product, its presentation, and also going to give you a demo with a team of how MarketSmith application works and helps people to make money. But before I invite Mr. Birch to share his experience and information about William O'Neill and William O'Neill Companies, I'd like to share a small video about Mr. William O'Neill and the work that he has done across the globe.
My next guest tonight is a man who started as a stockbroker in Los Angeles back in 1958 and turned $5,000 into $200,000 in a year. He did not stop there and shortly after became the youngest person ever to acquire a seat on the New York. My next guest tonight is a man who started as a stockbroker in Los Angeles back in 1958 and turned $5,000 into $200,000 in a year. He did not stop there and shortly after became the youngest person ever to acquire a seat on the New York Stock Exchange. Brash enough to have launched a competitor to the Wall Street Journal, shrewd enough to have created one of the top growth stock picking formulas in the country, and bold enough to actually debate the merits of buy low, sell high. He's Bill O'Neill. He comes to us tonight from Los Angeles.
As I look back, there are some major things that I did that I never really wanted to do, but the situation and circumstance would make it such that, well, gee, I'd better do.
So everything was very, very manual in those days.
We would buy a machine and then have to heavily modify it to get it to do what we needed it to do, because there was no one else in the country that was doing anything like what we were doing in those early days.
I don't think it ever entered my mind if I started a business, gee, it might not make it. I never bought a bond in my life. I didn't know anything about commodities and options and all these other things that brokers do. They're into every business they think they can make some money on. I just concentrated on stocks, and if I didn't like the stocks, I just sold it and put it in T-bills.
He doesn't follow Wall Street. And our research is a little bit different.
In fact, we ran some ads a couple times talking about how we use computers and everything, and somebody, some competitor, I don't remember who it was, whether it's Dean Witter or what, somebody ran an ad in a paper and said that if we spit out our customers to a computer, that they would revolt or something like that. So one of the competitors took a big shot at us. This product I created was a chart that has all the price and volume, but it has all the fundamentals. Put it all in one place where you could look at one and see all these variables. How we got in the printing business, a guy down in Orange County was doing a lousy job and creating problems for us, and finally I got disgusted. I said, go get a printing press and we'll start doing it ourselves.
They were pretty state-of-the-art at the time. Now, this is the early 70s, mid-70s, and they were as large as a small room, each one. But I used to love running them fast.
And I remember when we set out to sell that first book, I traveled around a lot of cities. The impression was always the same thing. They'd look at it, and they'd look at it, and they'd look at it. They'd study it and study it, and they'd say, well, we'll take it.
The charts today are excellent because we've been in the business for 50 years.
You know, the earnings and the sales and the profitability measures and something new, an exciting new product or service or new management.
Really boiling down what makes a great growth stock, what characteristics does it have?
And we didn't really know what we were going to find when we studied from 1880 to the 1960s, because everything else was done from the 60s forward. So I was personally a little scared that, what if this didn't work back then? What were we going to find? And I was pleasantly surprised that, what was working in 1890 was the same thing that was working now.
All of those same factors have remained constant. So, we can have confidence that, our methodology is going to continue to work for decades to come.
Bill had wanted the online product, and he had a team of developers that came aboard in the 80s. And they got the chart going, but the technology to deliver it to the institutions wasn't quite there yet.
We have to be on time with everything that you need to know.
On time and up to date. That's Wanda, the William O'Neill and Company's newest and most innovative investment tool.
The real innovation came in the 90s with Wanda.
The world's really pretty small. I mean, human nature is human nature. People are pretty much the same around the world, and they speak a different language, but they all, want to make money. And I think that the investments work pretty much the same way too. I just wanted to do one thing that I knew and understood, and we stayed out of trouble that way. If I had some plan, maybe I might have thought, well, at some point I could maybe start a little hardware store or something.
Thank you. I'd like to invite Steve Birch now to share his experience with us.
Thanks, Manjeet. Thank you. Good afternoon. Thanks, everyone, for attending our MarketSmith India launch today. I appreciate you taking time out of your day to have lunch with us. I'm Stephen Birch, the president of William O'Neill and Company. We are a 54-year-old global equity research firm with offices in Los Angeles, San Francisco, Chicago, Boston, New York, London, Shanghai, and Bengaluru. We are here today to show you MarketSmith India. But first, let me provide some background. The video you've seen highlights Mr. William O'Neill, the founder and namesake of our company. I've had the pleasure of working directly with Bill for over 20 years, and I can attest that his teachings about how to invest have transformed my life and the lives of many ordinary people that took the time to learn and apply his principles to their stock market investing. When Bill started his career as a stockbroker, his approach to the market was random and haphazard, buying stocks based on rumors and tips. And after losing money, he decided he would defer to the experts. And he started buying stocks recommended by analysts at brokerage firms. But he still lost money. He then started investing based on books about esoteric and mystical chart patterns. But he still lost money. So he took a break from investing, and he looked for a more scientific way to figure out what to buy. One day he had a simple epiphany. Rather than listen to others with their theories, their tips, their biased viewpoints, he decided to create a list of stocks that had appreciated 200, 300, 400% or more. And then he studied all of these stocks' fundamental and technical characteristics before they made their big moves higher. Bill was an early quantitative analyst who cataloged the common characteristics found in great winners. He is a master profiler. If he wanted to learn how and when to sell a stock, he didn't leave it to gut feeling or listen to someone else's opinion. He went into his database and asked, when stocks top at their peak, what fundamental and technical characteristics did they exhibit? And after he created a catalog of common characteristics, he would evaluate every investment opportunity against these characteristics to increase the probabilities that he had a big winner. So what were some of the common characteristics? Well, Bill codified in a book, you saw it on his video, a very popular book. It sold 4 million copies in the United States, called How to Make Money in Stocks. And the acronym CAN-SLIM stands for 7 factors that appeared to be most important in these great winning stocks. Things like accelerating revenue growth, accelerating earnings growth, high relative price strength, increasing trading volume, new products, new management, and industry group strength were all persistent and important factors in these great winners. For over 40 years, we used our unique methodology to advise U.S. clients about great U.S. investment opportunities. Bill even created a newspaper for the individual investor called Investor's Business Daily, with the sole intent on educating and sharing CAN-SLIM. About 10 years ago, we embarked on broadening our database beyond the U.S. We expanded to cover over 70 countries, and we tasked our analysts to apply CAN-SLIM outside the U.S. Their emerging market portfolio has beaten the benchmark index by a factor of 10 times over the past 7 years. CAN-SLIM works because it is empirical. The same factors influence and inform investors around the globe. Over long periods, stock prices, whether in London, New York, Tokyo, or Mumbai, are highly correlated to earnings. Unfortunately, investor returns are often highly correlated to fear, greed, pride, and ego. A disciplined and structured approach like CAN-SLIM helps people to remain objective and remove the emotion from investing so they can consistently control their risk and build wealth. We have invested heavily in testing and refining Bill's original research. Our firm has also embraced technology as a tool to assist the human mind in taking risk. Investing can be as much art as it is science. Our tools and research help individuals balance their emotional investing intuition against the empirical evidence. The United States has a very mature capital market system. As younger, modern economies such as India's evolve their capital markets, opportunities for the individual Indian to participate in the innovation and growth that surrounds them will abound. Investing wisely in the stock market requires patience and study, and it is our hope that MarketSmith India will empower and teach any and all Indians how to build wealth through stock investing. It is my pleasure to introduce Anupam Singhi, the Chief Operating Officer of William O'Neill India. Thank you.
Good afternoon, ladies and gentlemen. It is a pleasure to have you with us, and thank you for taking time out for this event. I would also like to offer my sincere gratitude to Stephen Birch, who has traveled all the way from LA for this event. Steve is a market veteran and has worked with legend William O'Neill himself for over 20 years. Steve is a very humble person and has been a great mentor for me and would let his work speak for him. However, I would like to highlight it to this esteemed audience that Steve wears multiple hats at our organization, but he's also a portfolio manager for over 2 decades. And he's outperformed the market consistently in those 2 decades. In fact, between 2000 and 2005, he generated 1,000% return in the market. Thank you, Steve, for your continuous support, inspiration, and thank you for coming all the way from LA for this event. I joined William O'Neill India in early 2013, and it has been an incredible journey for me. We started with a team of 20 analysts, predominantly working on data collection, mission-critical data in a very timely and accurate manner for our products. Now we are a 200-people strong team in Bangalore. We cover the entire ecosystem to support our world-class product and global customers. We have a team of passionate stock pickers, very well qualified. Most of them are chartered financial analysts and now very well versed with the CAN-SLIM method of investing. And they are recommending stocks for over 70 countries for our global customers. We have also established a very strong product and software development team in Bangalore. They are working on cutting-edge technologies to continuously innovate to deliver our best-in-class products to our global customers. While we were busy setting up our operational center in Bangalore, we were always very keen to bring our world-class research to Indian investors to take advantage of this booming economy and equity market. And I'm very happy and very glad that today we are taking that first step in that journey by launching MarketSmith to India. Now, when we started working on MarketSmith India as a product, there were obvious challenges and opportunities for us to look at. These are some of the challenges and opportunity. But if you look at the Indian society, we have a very high propensity to save, but not necessarily high propensity to invest in equity market. Retail participation is very low. And if you look at something like MarketSmith India, when you see that kind of retail participation, people can easily say there is not a potential, but we see that as an opportunity. You know, there are obvious reasons and valid reasons why people are not investing in equity market. Most markets have done well in the long period, but most of the investors have really lost money in the market. Most of the people have seen either themselves they have lost money or their close family member or relative lost fortune in the market, which really weighs heavily on their mind before they want to take a direct plunge in the market. And then if you look at the industry, the product and services which we offer to retail customers have also not helped the customers make money in the market. Most of the research you see have vested interest and biases. Broker research is driven towards generating commission income, not helping customers make money in the market. There's a lot of free data providers, but they don't give you the filtered information, the critical information which you really need to take informed decision in the market. These are some of the challenges, but we believe there are some interesting changes that are happening in the market. Rising income, rising aspirations. Most of the country is young. Most of the people are below 35 years. They are looking for ways to create wealth for them. And I think media has also played a very critical role in creating that information, education, the benefits of investing in equity market. And I think we offer a right product and service. We can really help retail investors to create wealth in this market. And that's what we are setting at our vision for MarketSmith India. We really want to become an elite thought leader in equity investing, empowering retail investors to create wealth by creating a community of practitioners and evangelists who can further propagate the system of investing, which is CanSlim. It's a proven system, 50 years of heritage, and we believe if we can provide this information and education to Indian investors, we can achieve that. We are very confident and we really believe in it, and we stand with this philosophy, and I hope we will be able to deliver this in the near future. Now, before I get into the product details and provide a demo, I would really like to talk about the MarketSmith journey. As I said, in 2013, our primary objective was to set up a center of excellence in Bangalore. As soon as we stabilized our operation, we assimilated a small team of people to look at the content, research, and the data required for Indian market to power MarketSmith. Team started looking at the model portfolio, started picking stocks for India for our model portfolio. And I am very glad to share that we have performed exceedingly well. We have outperformed the market by factor of 2. While market has given in that period 40% return, 48% return, we have delivered 108% returns. So team has done an amazing job of performing in model portfolio in Indian market. Once we established the data and research requirement, we got into the product development and software development. And again, we didn't have to start from the scratch because the best-in-class tools and services were already available. We just took our best-in-class tools and services and packaged using the Indian content research created by us and packaged it. By September 2016, we were able to launch it as a beta version on Google Play Store. We consciously launched on a mobile platform, and all of you know that smartphone usage in India is rapidly increasing. With low cost, high bandwidth internet, people are accessing more information on their mobile devices, and that's the reason we launched it on Android. And it was a beta version. We launched it for select users and customers to test it and take feedback before we can formally launch. And I'm very happy to share, while we launched it for select customer, people discovered this app on their own. And we already seen 15,000 plus downloads. There are 5,000 plus registered users. And 2,000, the most heartening thing which I really like is the positive reviews we are receiving on Google Play. Customers are really liking this. We are one of the highest rated app on the Google Play Store in this category. I'll show you some of the testimonials which really sums up our effort on MarketSmith India. I think another interesting thing to look at is that we already have hundreds of paid subscribers. So we are very happy to see traction before the formal line. These are some of the testimonials. If you look at the first one, this really sums up the MarketSmith app. Such an amazing app, so simple and easy to understand. If this doesn't help you grow your money, I doubt anything else will. Amazing insights of every stock, give it a shot, you will be a better investment. There are many comments like that. And another interesting thing which we are seeing is that across the spectrum, whether it's a sophisticated investor or a novice, everybody is taking advantage of that. And that's what we wanted to do with MarketSmith. Now let me talk a little bit about the MarketSmith product, what exactly we want to do with MarketSmith, what are the feature sets available in MarketSmith. We will also have a demo for you which will help you understand product in more detail. As you know, the stock research is critical to investing success, but gathering all that information can take a lot of time. And what we have done is we have simplified that for a retail investor. Within minutes, you can find strengths and weakness of any stock with concrete facts. It is a great blend of technical, fundamental, and a lot of qualitative information which any investors need to make informed decisions in the market. The app is now available across platform. As I mentioned that we launched it on a Google, but now it is available across platform. It is available on a website, and very soon, hopefully within a week or two, we will have it on Apple Store. Along with the right tools, we feel that education is a key. As I mentioned, that retail investor participation in India is very low. And we believe, and that's what Bill kind of worked for 50 years, to educate people on how to invest in equity market. We have taken it very seriously. And what we have done is we have built a very high quality, interactive educational content on our app. There is an entire university which covers everything about the stock market and the CanSlim, which people can really benefit. And it's absolutely available for free. We do a lot of webinars on a weekly, bi-weekly basis to help customers take the insights of the market and learn about investing in stock market. We also do a monthly workshop where it's a long workshop where we take them through the entire CanSlim and understand how can you really take benefit from the tools. So these are some of the things which we have tried to design in our app. I think what I'll actually show you a video which really takes you through the features and show you the power of the tool. And then, yeah, let's see the video.
MarketSmith India is a powerful equity research tool of exceptional design based on 50 years of stock market experience of founder and investment legend William J. O'Neill. First launched in the US over 3 decades ago, MarketSmith uses the CanSlim methodology and has had phenomenal success globally. MarketSmith India helps you find winning stocks before the big runs. How? First, MarketSmith India gives you new stock ideas with a manually created model portfolio that filters through thousands of stocks to handpick those with the best potential to move higher. Next, we use our industry-leading stock charts to quickly review key fundamental and technical data all in one place. Then validate your ideas with pattern recognition, which automatically draws chart patterns for you. You will see what to buy, take profits, and minimize your losses. Plus, MarketSmith India comes with idea lists, custom filtering, market outlook reports, and alert mechanisms to keep you up to speed on all the action. You will get all these premium features, plus free product coaching so you can get started quickly. Or log on to www.marketsmithindia.com now. MarketSmith India is a
I think before we get into demo, I would like to invite Steve to formally launch this app, and then we'll get into the product demo.
It is my pleasure to take this app out of beta and to formally launch it. Do we have a video up here so you guys can? I'm going to just click the button, and we are going to go live with. There it is. So it is now officially in production. It's on mobile. Now, why don't we have Tom come up and give you a live demo? This is real software. It's in production. We have subscribers, and he'll tell you some more about some of the features, and then we'll do a QA.
Thank you, Steve and Anupam. Good afternoon to you all. I would like to thank each one of you for coming over here for our product launch. I'm Tom Jose, and like they mentioned, I have been with the MarketSmith India team since its inception, and I'm absolutely excited to stand over here today to do the product demo. So MarketSmith India, like Steve mentioned, is a tool or a product which helps you simplify your CAN/SLIM analysis process. Okay, so the whole methodology of CAN/SLIM involves a lot of analysis of stock, which might make you, it's a three-step process basically, which involves stock selection, stock timing, and finally market condition analysis. So to select whether a stock is good or not, you need to identify each of the 7 letters of CAN/SLIM and see whether it fits into it. Now, this would mean that you have to scrutinize the financial statements of the company for like last 5 to 6 years. You might have to read a lot of news on the company, what is happening with it. You also might need to assess the supply and demand of the stock. So these are things, most of it involves information which might not be available publicly. And even if it's available, that need not that would be a tremendously time-consuming process. So let's just see how MarketSmith India simplifies it for you. Let me open a stock for you. I'll open, say, Canfin Homes, which you can see here. Now, here it is. So once you open the stock, for anybody who's new to investing, this part, the Master Scope B, summarizes the proprietary view of William O'Neill on that stock. This is based on our international algorithms, which we've customized for India exclusively. So this tells you this summarizes basically what it is, and it says it's a stock to evaluate closely, and it has a good rating. A and B are considered really good. Now, for advanced investors who want to see more inputs into how this is done, you can look at our other proprietary ratings, which talk about the strength in terms of different parameters. Now, for those of you who want to see the real fundamentals reported by the company, you can actually look at this tab. Here, you have all the fundamentals that is needed for a CAN/SLIM analysis arranged in one place in a structured fashion. So you see here the earnings table, the price growths, the earnings growths over the years, different ratings, different financial ratios. So these are all different aspects of fundamental analysis which is needed. Now, for the advanced investors again, if you want to understand how the stock is performing in that particular industry group, he can actually have a look at this and compare it. This gives a comparative evaluation with respect to other stocks in the industry. And finally, you also have a checklist. So for an investor who's new to CAN/SLIM, he can just look at the checklist and it gives you whether it passes or fails each of these criteria. And you can take each of these criteria and you can take a balanced objective assessment of the stock. Here again, for the advanced investor who wants to further refine this criteria, he can actually use the custom filtering features which are also available. So this is how we actually simplify a tremendously time-consuming process into maybe less than 5 minutes of analysis to figure out whether a stock is good or not. So, like I said, identifying whether the stock is good or not is the first step in CAN/SLIM. Now the next one is, okay, the stock is good, but is it the right time to buy the stock? So for that, from the fundamental analysis, we move to the technical analysis. So for that, we have a chart here. So in this chart, I'm not sure if it is very clearly seen, but there are shaded regions, a blue shaded region, a green shaded region, and a red shaded region in here. So any stock whose price is in the blue shaded region will be in the buy range. So for a beginner investor who's looking at it, it just needs to see whether this price bar comes in this range or not. And for advanced investors who want to do more advanced technical analysis based on CAN/SLIM, we have all the patterns. The pattern recognition feature which Steve spoke about, which was propounded by Bill, is available here. So tapping on this gives me details of the patterns which the stock forms. all pattern details. We also see the formation of how the stock moves, the 52-week highs move, and the 50 and 200-day moving average lines, the relative strength line, how it is moving, how are the volumes doing, what is it relative to the average volumes, everything, how different, how high off pivot it is, are there power from pivot flags, everything that you would need to do a technical analysis is also present here. So now we've identified that the stock is good, and we've also seen that the stock looks good technically as well. Now the last aspect is the market supportive? What's a trend in the market? Is it a good time to really get into the stock? So all you need to do is to come to the home screen and, sorry. So here it is. You will have it loaded here, which shows that it's in a confirmed uptrend. And as you can read, it's a perfect time to buy new stocks coming out of sound chart patterns. So this is something which we've already done. So this is how the Cancelim analysis simplified, so that the whole thing happens in a few minutes for a stock, rather than which would otherwise have needed a lot of time, resources, and money from part of investors. Now, another aspect of Cancelim is basically what we call as the weekend routine. So people who invest based on Cancelim typically tend to take some time off during their weekends to prepare a watch list of good, great stocks. Now, this watch list helps them be on an autopilot mode the very next week, because whenever any of those stocks exhibit expected characteristics, you either buy or sell them. So for that, we help you by using the idea list feature in here. So this gives you a list of a different set of lists which a user can look at and treat it as a great watch list. So for example, if you look at it, the first one you see is Top Stocks India 47. Now, this is an algorithmically generated list. And we use our international proprietary algorithm, which is customized for India. So we've been following India market for several years, and that has helped us customize most of it. So this algorithm generates a good list of growth stocks which investors can seriously consider. Now, for those investors who would want to have, this is generally recommended for the advanced investors, and if they want to further refine the criteria in terms of maybe looking at a slightly more stringent criteria or a slightly more relaxed criteria, you have this feature called the filter. So this filter feature will help you refine it. So you want to see only those A-rated stocks in that IND 47 list. You can do that. Or you want to see only those stocks which belong to, say, mid or small caps. You can do that. So all of this is possible using the filters. And once you filter the stocks, you can also identify the top 1, 2, 3, or maybe 4 stocks by sorting them as well by multiple criteria that are available. Okay, so this helps you create a strong watch list of stocks. Now, this is one of the basic watch lists which we see. And the next list that you can look at is the India model portfolio. Now, this is the model portfolio of stocks, which is tracked by the MarketSmith India research team. And these stocks are handpicked by them. So which means that all the homework in terms of the 7 letters of Cancelim is already done by them. And for a beginner investor, the current holdings, which are near its buy point, is a very good list of stocks, Cancelim stocks, chosen by the MarketSmith India team, which they can directly maybe consider adding to their watch list. Additionally, we have several other lists that you see here, and you can use any of these, and clicking on any of these will give you more details, and the users can generate lists of their own as well. And the filtering capabilities are so powerful that you can create your own algorithms. Like, you want to see only out of all the stocks in India, you want to see which are all A-rated and which are all those which I can buy maybe directly. You can get that here. So that's how we help you create watch lists of stocks. The next aspect is mainly the M in Cancelim. So the M talks about the market. So what happens in the market is a powerful part of our analysis, and the market outlook helps you analyze the market. So here we give our reports on how the market is doing, what is the expected approach investors should adopt in this market, how exactly the market has been trading over the past week. So we give updates on a daily basis and on a weekly basis, and both before and after close of market hours. Additionally, we also have a set of educational reports or special articles depending on the market condition. For example, this week is expected to be an earnings release season now. So you can see that we had published a report this Sunday on gearing up for earnings season. So most of our reports are very relevant to what you should do. So another thing that we did was when the markets were going up, I mean, all stocks were trending. And then we were speaking about how important it is on the price highs of stocks. So that's how we craft our articles and customize them to suit the current market. So now, the last section which you see is the model portfolio. And like I explained earlier, this is the model portfolio of stocks handpicked by our team. And suppose, you, as a beginner investor, you've invested in any of these stocks. Naturally, you would be curious to know on a daily basis as to how your stocks are doing and what's happening to them. So you might see the stock price going up or down, and naturally, it could cause a lot of anxiety on this. So we are here to actually alleviate your concerns by giving a report on these stocks on a daily basis. We observe them and we identify any developments on the stock. We also see whether there are like any news on the stock, whether you might expect maybe the stock to go up or down, and when you should add and remove. So in the model portfolio, another feature that you will see is, suppose you are some new investor who just wants to follow what we do, and you probably want to add and remove stocks as and when we add and remove it to our model portfolio. You have alerts. The alert mechanism is there. So whenever we add a stock, we send you a report in email and in the stock in terms of why we added the stock, what's the best price to enter, and all of that. Similarly on the remove as well. So if you are investing as per our methodology, you can probably be rest assured that it could be on an autopilot mode, because you would be told when to buy, when to sell these stocks. Now that sums up most part of this product. And the rest of it, like Steve mentioned, one of our objectives in India is to create a community of evangelists and practitioners. And that's why we place tremendous stress on educating the customers in terms of canceling. So for that, we have options here which Anupam spoke about. That's an investing university. So this is a structured approach to learning canceling. So investors can take some time off on a daily or weekly basis and learn canceling by looking at this. Now, the bi-weekly webinars and seminars which we conduct in our office, like Anupam mentioned, the videos of it are also available here. So most of it you can access here, and any doubts you have on the tool could be clarified by going through these pages which are available in support. And of course, any more questions that you have, you can always reach out to us, and we'll definitely rest assured that we'll get back to you soon. So that sums up most of the aspects of the product that we can look at. And yes, we are constantly innovating. We are listening to our users, and we do consider user feedback with very high weightage. So we've introduced a lot of features, and we are bringing in a lot of features based on what our users wanted and users got back to us with. So with that, you'll see a lot more features being added as well. So I think I'll call upon Anupam to take it forward. Thank you so much.
Thanks, Tom.
Thank you, Tom. Yeah, we'll talk about the pricing. So right now, as an inaugural offer, we are also offering free trials to our customer, so they can use this product for 1 month absolutely free. These are inaugural prices, and for annual subscription, if you look at the MarketSmith US, the prices are very high. In India, we ensured that most users can use it and take advantage of it. So our annual subscription is 12,500. Quarterly subscription is 3,500, and we also have a monthly subscription which is 1,250. And again, as I said, It gives you all the premium features with that. You get access to our model portfolio and all the premium features, including pattern rec, our proprietary ratings and rankings and charts. But also a lot of information is available for free. For example, anybody can look at any stock and you can get the ratings, rankings, and our views on the stock. So it's a great tool, whether you want to use the premium features or the free users. It's kind of absolutely right information tool to take advantage in the stock market. With that, I think we'll open up for questions, Q&A. So I think we have some 20 minutes or so, or maybe if we will be around for lunch as well. So if you have any more questions, we can happily answer that.
Who has the first question?
Yeah.
Right here, this gentleman here. Here's a mic so people can hear.
I just wanted to ask the numbers. You said you had 2,000 paid users?
No, hundreds of paid users. Like I think we last count, it's around 200 users.
And what's the trend like? I mean, are they going for monthly?
Every quarter, every month we are seeing, every week actually we are seeing increasing. Because as more people are discovering the app and more people are finishing their trials, because first few months most of the people take free trials, we are seeing a very good growth pattern. I think we are kind of doing 2x on a monthly basis.
And on the what's the trend like? Do they go for monthly, quarterly? How do they subscribe?
70%, I think, maybe I still need to look at it, but I think 70% of people prefer annual because that gives them a good savings.
And the other thing I wanted to ask you, based on your experience on the markets that you already established, what do you expect in the coming years? Like, what's the numbers or any color on that? That's my question.
Yeah, I think we have some certain numbers, and of course we are here for long haul. It's a very long-term objective because, as you know, the participation in equity market is low, and you really need to create a lot of practitioner evangelists, and we really want to invest our time in educating a lot of people. We definitely would like to see more and more people using it. We believe if we do the right things, we can have 20 to 25,000 users in the next 3 to 5 years. That's what we are looking at. But most important thing for us is to let people know about CanSlim and power of it.
And when you say 20 to 25,000, are you referring only to paid users or generally?
Yeah, I'm subscribers. But yeah, I think from users who are looking at our app, I'm sure this year we should do a lot of downloads, and a lot of people are going to try it for free.
Okay. Yeah. Thank you.
Other questions?
Is this software or app available across all the stocks which are listed, or you have certain specific stocks on which you conduct your research?
Yeah, that's a good question. We have ensured that each and every stock listed on BSE and NSE is available on our platform. Of course, the top 500 stocks in India are doing the most, volume in terms of trade. But we have ensured that each and every stock is covered. But as you go down the list, a lot of information is not available for those stocks. They are very thinly traded, and so. But yeah, most of the important stock, everything is covered. I think 3,800 or something have a lot of information on them.
And what is your source for fundamentals?
These are all company public reported information which we take. But most critical thing which Tom also talked about is we do a lot of algorithm. We kind of curate a lot of this data to ensure that we are able to give the right information. Okay. So in India, there's a lot of free information available, but the issue is that a lot of time the data is not properly curated, and that's what we really paid attention to. So our ratings and rankings are really does almost all that job of purifying it, distilling it so that you get the right numbers.
Thank you.
So yeah, most of the data, we have some data providers as well for, we use NSE, BSE for our pricing data. Yeah.
How fast the data would be refined? Suddenly the market is down 10%.
Correct.
And how quickly the app would give me the refined, research data for a stock?
Yeah. I'll let Steve also talk about it, but way we have a very objective way of looking at markets. There are a lot of opinions in the market. When you open a TV channel, you will hear people giving you so many views, and that's the good thing about the market. There are counter views. But we have developed a very scientific way of looking at the market. William O'Neill created, he studied empirically over a long period many major indices. And what we have identified, there is a method of using distribution day. Distribution day, it's a little technical, but I'll just give you a very quick view, is when market goes 20% or low on any day, on a higher volume than previous day, we consider it as a distribution day. And we see a lot of predictive power in that. And we use the count of those in a particular period to assess the market condition. For example, and we also use, so basically we try to look at, whether market is in uptrend or downtrend. Distribution days helps us look at when market is becoming a little under pressure or going to correct. But then we also look at when it will go under. For example, we called in early January the market is going to be an uptrend. In fact, many people didn't believe us, and then market has done really well. So it's a very objective way, but we don't predict. We just let market tell us what's going to happen next.
And I'll add to the answer. In terms of the ratings and the rankings, they are recalculated every night. They're recalculated daily. So we're constantly evaluating the entire Indian universe against each other, and we're trying to give you a score from 1. We score at 1 to 99, and then sometimes we translate that into an A, B, and C grade to simplify it for the user. So every night we're updating the databases and we're updating the proprietary ratings and rankings. But the most difficult part for many people is the general market. No matter how much research you do, doesn't matter what approach you use, if you get caught in a bear market, you can lose a lot of money. And so Tom mentioned this because our analysts in Bangalore are watching the market, pre-market, post-market, running it through the rules that Bill came up with. And it's really an interesting backstory. When he, Bill in his early career, as I described to you how he started to refine his process, what stock should I buy, and he started to become much more scientific and quantitative. He made one mistake, and that was, he was buying great stocks. This was probably in the early 60s, 1960s. He made a lot of money, doubled his account. He found all these great growth names. He had no sell rules. He forgot, and he never paid attention. And he goes, well, I'll worry about that later. I'll make so much money, and then I'll just figure out when to get out. So he went, his account doubled, and then it collapsed. And he sat there and he goes, okay, I need to do the same thing I did on the buying. I need to profile these stocks to figure out when to sell them. So he started to do that. So he started to identify certain characteristics, and he was on guard. If this starts happening with my stock, it's probably topping, no matter how much I love it. But he forgot one thing. He made the same mistake. So, okay, I know how to buy, I think I know how to sell them, but I'm still losing money because he didn't figure out a rule for the general market. And the general market is really the driving force. 3/4 of the stocks will ebb and flow with the general market, regardless of their underlying fundamentals. So he went in, he said, okay, I have to profile this. I have to, rather than listen to a theory from an academic or someone's opinion on TV, it was a very simple thing. And we have a chart in our office. He went back over the market and he said, okay, we're gonna identify every peak and every trough in the major index. We're just gonna find the dates. And once I've created a list, okay, here are the last 27 market cycles, major peaks and major troughs, peaks and troughs. Let me go into the database and start asking questions about the technical nature of the index. Technical meaning he studied the price and he studied the volume. He looked at other things like advanced decline. He looked at some secondary factors. But what he came up with was another revelation. He said two things. He said, every market bottom has a signal called a follow-through day. Every single market bottom has a follow-through day. Now, it doesn't mean that every follow-through day will result in a major bull run, So we do get false positives. There are times when you get the signal and you're going, it might be the bottom, and we're getting ready, and then it fails. But every single bottom had a follow through. So now we know that we've got to pay attention to that signal. Likewise, when the market tops, these distribution days that Anupam talked about, he codified that. Now, it's complex. It takes study to really understand what he wrote. And so for the novice investor, it's overwhelming and it takes patience and dedication. But what we do here is we really give it to you in bold type at the top. The Indian market has been in a bull mode since January. That's when we got our signal. It is in a confirmed uptrend. No matter what your opinion is, no matter how much you're prognosticating, it is in a bullish state technically. We have not seen the telltale signs that accompany market tops. But the analysts on our side will do that work. They put it right there and they write it out so that over time, if you take an annual subscription and as you become familiar with how we look at the world and how we see these signals, it becomes very, very clear. So this is it really is we do charge quite a bit more in the United States. We've lowered the price here. It's a phenomenal value for people who are serious about the market. Our intent is this is not a run and gun, day trading, high velocity. We're going to make a ton of money and then we're going to leave. Bill's been doing it. I mean, he just turned 84. This was a lifetime for him. And it can be, if you really appreciate the power of compounding and you understand that the time you spend learning properly how to invest, it can transform your life. It really can. And that's what's so exciting. That's what drove Bill to really not just keep the knowledge to himself and to the institutional community. He said, I really think this should be shared, and I'm going to start to print a newspaper and offer services like MarketSmith to the retail public. Other questions? Any questions about our company, about our services here?
Hello. You spoke about the model portfolio, but nowhere I have seen the time horizon that is mentioned about any particular stock. So what are the time horizons that you are looking into as far as this model portfolio is concerned?
Yeah, that's a very good question. As I said, Bill has done a full empirical study. What we, as per our method, what we have seen that's the biggest, win of any stock, last 56 months or so. In India, we still kind of, we are seeing the same kind of trend. From a model portfolio perspective, what we have seen from 2014, mid of 2014, that on an average, we have 3 to 4 months. And of course, market have been also very choppy. We haven't done too much from an index perspective. But yeah, we see 3 to 4 months, but there are stocks which also, like Pidilite was, I just want to put a disclaimer, these are not recommendations, etc. But for example, Pidilite was there for a long time on our portfolio. But generally we see 3 to 4 months. The way we do it is not intraday, but it's also not 20 years you're holding the stock. It's a kind of, we want to try to capture the biggest price move in a stock. So average is around 3 to 4 months.
Okay, so how it is expected that the user of that particular app, based on his time horizon, the investment that if you want to put in for 3 months, how is expected to understand from your software that these are the stocks he should look into?
Yeah, so we have tried to make it easy. So what we do is we have created certain services. For example, it will alert you. It will notify whenever we add, and we are very transparent, no cherry picking there. So every stock we add or delete, you will get to know about it. Even if it's not doing well, and when we take it out, we explain it to the customers. But also another thing, what you can easily, email alerts, etc. is there. But on a weekly basis, we provide the feedback to the customers, because sometimes we might take the stock in our portfolio, keep that, but we also let them know if they want to book the profit, because we have rules for our profit booking. So stock makes 20-25%. We might advise our customers to book profit on that. But we keep them updated. And on our app, you can easily look at those commentaries on a weekly basis.
Okay, another question is that you mentioned about the qualitative analysis that you do. So I wanted to know that what is your methodology, first of all, to understand what is the qualitative analysis, whatever you do. Secondarily, what is the impact factor, how you analyze the impact factor on this particular recommendation or that you give based on the time horizon and stuff, and the frequency with which you update that.
I just want to add one thing on the time horizon. We really don't have a time horizon when we add a stock. Stock tells us, the price performance action tells us whether we need to keep it for many years or for few. If it becomes weak, we have very clear rules, we might sell it. So time horizon is something which we don't, I'm saying is average. So there are stocks which can stay there for 2 years, then there are stocks which we might not have for even few weeks. So that's a time horizon. The other part to your question was, what was the first part?
My question was, you mentioned about qualitative analysis. So what is your methodology, how you analyze the impact factor of that qualitative data on the stock you are suggesting? And third thing is, what is the frequency of its updatation?
I'll take that. That's probably one of the most important aspects of investing is that last qualitative piece. I talked about the art, as much art as it is science. If any of you guys are involved in the market or have had years of sort of watching it, once you figure out what to buy and you've really got your process down, and you still have a list, you'll still have 10 names, and you'll say, wow, they all look pretty good. And if it's very rigid and very structured and it's quantitative, that last part of, okay, I have to do the qualitative work. I have to really think about, why is this stock going to go up more than the other one, right? And the qualitative work that we do is really guided by what Bill found. And one of the letters was at the N, C-A-N. The C is current earnings and revenue, A is annual, N is three things: new product, new management, or new highs. We saw that consistently before stocks would make big runs. They either had a new product, they had new management, or the stock was actually making new highs, not new lows. Now, when you have a new product, and think about how this all ties back to earnings. And I stated in my piece that the real core belief is that prices follow earnings over long periods. So if a company has a new product, most of us get excited. Oh, did you hear about the new service? They're delivering this. They have a new retail product. You have to tie that to, are they generating revenue? And if the answer is yes, are they managing their business properly so they have good margins and they're generating earnings? And the answer is yes. Okay, that's all great. We see that in great stocks. The last thing is, do they have a competitive moat? That's qualitative. Our analysts are asking that question. Is it really sustainable, this edge that they have? And so back to your question about timing, what's fascinating is, a lot of people say, I'm a long-term investor. I worked hard for this money, I put it in the market, and I'm holding it I'm going to be like Warren Buffett, I'm going to own stuff until I die and just forever. And that's fine. If that suits your temperament, that's fine. Now, there are many times that long-term investors miss opportunities because they've married themselves to their loves, their position. And when you empirically go back and say, well, wait a minute, let's look at all the investment opportunities that are out there. And we've studied stocks that have gone up 300, 400, 500%. How long did they run? And that's in our database. And I tell people this, and they're really surprised. They said, the typical stock in our model database that's had these big moves, 15 months. 15 months. That was the period, that was the sweet spot of where you buy and it rallies. And if you could be absolutely perfect on the spot to buy it and the spot to sell it, on average, it was a 15-month move. Some stocks would move in 3 months. Super hyper growers. Others, maybe, 24, 30 months. But it's very, very rare. I mean, in a capitalist society, because of competition and creative destruction, it is very rare to say, I've got a secular growth name that I'm just going to buy and own it for 20 years and I'm not going to worry about it. And you guys see this. I mean, in a very dynamic economy where there's so much entrepreneurialism and competition, you have to be much, much more active and nimble in managing your investments. And so yes, we don't have targets on, okay, we're going to buy and we'll hold. And to answer Anupam's, or to address what he brought up, well, then why are some of your names in your model portfolio only there for a month or 2 months? One of the unique things about O'Neill is he really advocates, he separates money management from your investment research, your company research. People spend so much time, researching the firm, doing everything Tom talked about, and once they take the plunge and they buy a stock, boy, the last thing they want to think about is selling it, because I'm in, I invested, I'm going to wait for it to work. But Bill got caught in these, and I talked about fear, greed, pride, ego. These emotions create mistakes. So he wrote in his book about cutting your losses at 8%. And that comes from looking at the patterns and realizing that when a stock breaks out, rarely after a big winner breaks out, will it sell off and undercut its breakout point more than 8%. It's empirical. He studied it. So he buys the stock. He goes, okay, it has the right pattern, it has all the right factors, and I'm in. Stock goes up a little bit, and then boom, he's down 20%. He doesn't sit there and say, well, I'm going to give it more room or I'm going to buy more. He says, whoa. Is this stock acting the way a great thoroughbred, a great winner typically acts? Do they go up and get me in and then they come down 20%? No, it's not in our database. We do not see that. That is not typical action. That is an empirical fact. So then he goes, okay, then I either bought it too early, or maybe it's not really a thoroughbred, or something's not right. Do I just add more? What do I do? Sell it. You are waiting for that high probability technical and fundamental setup where you've got the odds in your favor. And he advocates that, being very, very strict about your money management rules. Now people say, but I just bought it. But that contributes to some of our shorter term holdings, is we buy it, we think it looks good, and then it reverses. Well, why would it reverse? Most of the time, general market. Something that is beyond, and it has nothing to do with the company, it has nothing to do with the stock, but there's some broader factor that's just hurting all the stocks. So a key to what he teaches, and this is what's really helped people over the years continually stay involved in the market, rather than, as Anupam mentioned, novices that come in, they have these different notions of what it's like to be in the stock market, and they think fast money, quick money, I'm going to be a millionaire before I'm 30. That is not true. It takes study, patience, persistence, consistency, and how you apply yourself. And bear markets just clean people out. And so Bill's very, very articulate, and our analysts, and we teach this, we talk about money management. We're not just in there promoting names and saying you should buy this, you should buy that. Every investment carries risk. Every investment can go down. And so we're very honest with people. And once you understand that, and you have a better appreciation for the speculation that you're involved in, you increase the chances that you can continue doing this. And what's fascinating, you guys, I want more questions. I've been doing this so long.
But most difficult thing which we find with investors, especially retail investors, is selling.
They always,
You can just tell them to buy, they buy things quickly. But when you ask them to, whether at loss or profit, it's a very hard decision for them.
And I'd say
that's one of the reasons why the retail participation is low, because people have got into this bear market and they couldn't sell it. And then once it's, they lose 50-70% of their position, they feel now, what's the point of selling?
Right.
And they just keep there, and then they just lose interest in the market. And we are very clear with capital preservation. We really don't want people to lose, because it's, Bill's code, every 50% loss starts with 10%. So it's better to cut your loss at 8% than, be sorry at 50%.
And every 50% loser requires a 100% gain to get you back to where you started. Now that, and Bill would, he has a very interesting way, and you guys probably picked up on it. He has a near photographic memory, so it helped him identify patterns. It really helped him when he was codifying and classifying these things. But he's also from a part of America. He's from Oklahoma and Texas. Very plain spoken, very, very simple, and he just cuts to the chase. And he'll say, If you're down 50%, you've got to make 100. So that's simple. It's simple math. When was the last time you you made a double on one of your investments? And you go, God, it's been a long time since I've had that. He said, then don't ever let one of your investments go down 50%. And so then you're saying, well, wow, if I have to cut my losses at 8%, and you do that, and you go, okay, I'm going to follow the rule, and the first investment down 8, okay, I sold it. Second, I sold it. This isn't working. He would come back and say, well, no, it is working. You're preserving your capital. You're just buying poor merchandise. You're not paying attention to the general market. It's all these different elements, all these pieces of the mosaic that, that a professional investor learns about. And it's tricky for a novice, for a retail investor, but we really try to simplify it on MarketSmith so that we can walk people through all these different elements. And with time and with dedication, it does become easier, and you become more fluent, and you start to understand that, you start to eliminate the bad human habits. The second stock I bought was off of a rumor and a tip. Everyone does it. I never trade off rumors and tips anymore, but we're all intrigued by the idea that somebody passed you something that no one else knows about, and you're going to get in early and you're going to make a ton of money. But rumors and tips are not a sustainable way to build wealth. That is not a process. This is a very structured and sustainable way, and we really, I hope you guys all take a chance to take a look at it, do an eval, and we certainly have lots of time today to answer more and more questions about the software, about Bill O'Neill, about our company, about our approach. More than happy to go into more detail. Any other questions out here? I know you guys are probably hungry and we have food. Anybody else have a question? Manjeet, how are we doing on time? Okay. Let's take a break for lunch.
Yeah.
And then we can I'd be more than happy to chat with anyone. Thanks you guys for coming to the launch.
Photo.